What is up? Welcome back to another credit card news live stream. I'm Cal Barton. Now, this week is a little different because we're doing a pre-recording. But I still will be participating live in the chat. We're doing a little different because it's Mother's Day. All right. And if you're a mother, happy Mother's Day. Listen, I still wanted to get a video out to you, and let's get started. So first story is credit card debt surges again in March despite high interest rates. So after pulling back slightly in February, Americans went back to borrowing on credit cards in March despite record high interest rates. This indicates that consumers continue to struggle to make ends meet in this deteriorating economy. It also reveals that the Fed's monetary tightening is not cooling spending as promised. Consumers' debt spiked by another $26.5 billion in March, a 6.6 increase in year over year, according to the latest data from the Federal Reserve. It was the biggest jump in total consumer debt in 4 months. So listen, that credit card debt is going to be crushing. Those interest rates are still at like all-time highs. They're clearly over 20%. So if anybody's carrying a balance, you got to stop. You got to get those cards paid off immediately. All right, so consumers relying on credit cards to pay bills. So consumers are relying on their credit cards and installment loans again to pay bills each month, as balances for both types of debt reached record or near record highs. So balances for credit cards in the U.S. reached $917 billion in the first quarter, almost a 20% increase year over year, as consumers struggle to pay their bills with higher inflation rates and interest rates, according to TransUnion's latest report examining consumer spending during the first quarter. And the average credit card balance is $5,700 in the first quarter, rising up by almost 15% year over year. So, listen, your credit card balance should be zero every single month. You got to be paying that statement balance. And that's going to be crushing for people, you know? So you got to think about paying 25%. Some people paying even 29%. I once had a card that was issued through Synchrony Bank, which I know everybody hates that. But it was called the B&H Photo Paybu card. And that was one of the cards that gave you a really nice bonus of not being able, or it prevented you from paying tax. So they would just basically, at your checkout, they would remove the tax bill from that transaction. And so in my neck of the woods in New York, that was like almost 9% locally. And so that was a nice savings. And I'm surprised that they're still able to keep that going. I guess not enough people have the card to make it unprofitable. But the flip side is that the interest rate was 29%, so just below the kind of agreed upon limit. And by the way, that limit of 29% is actually, there's nothing in law that says that they can't charge more than that. So it's just something they kind of got together and agreed on, the different credit card issuers. Next, some buy now pay later users face rejection. So some users of buy now pay later apps might face something new when they try to use the payment method. Rejection. Okay, that's a first. Higher interest rates and recession concerns are challenging the business model behind services such as Affirm, Klarna, and Sezzle. I've never heard of Sezzle. Have you heard of Sezzle? If you heard of Sezzle, just comment in the comments that we got to talk about that. That must be a smaller player, which say they are tightening credit standards to focus on making a profit rather than growth. Some customers say they have been caught off guard by unexpected denials or lower spending limits when they try to make purchases. So that was supposed to be a real highlight of buy now pay later, is that they kind of expanded the pool of people that qualified. So even if you had fair credit or kind of, bad credit, so 600 and below, you could still get in the door, just because the way the payments are set up, you had to make payments every single week. And they were pretty much guaranteed because they're debited. You were forced to set up automatic payments, and it was just a 4-week payment term. But even with Klarna and Affirm and these buy now pay later companies, they're feeling that pinch because they're probably seeing a lot more people default because they already have other credit card debt. They probably already defaulted on on their unsecured cards, and they're just looking to get some relief by using buy now pay later on these items that they probably don't need. And so they're restricting it. And I just want to focus in on this a little bit. A lot of people don't understand that with credit card issuers and banks, they are always adjusting. They're making micro adjustments. They're making, different company moves and protocols internally, and they can change everything about who they allow into the, who they get approved for. So their credit worthiness limits, and what FICO score that they'll accept, how many inquiries they'll accept, what the highest limit that they'll give. All these things are fluid, so it's evolving. So whenever you see like a post and it's saying, "Hey, this is Navy Federal has a max limit on their cards of, of $80,000." Well, maybe that was $80,000 in the previous year or the previous quarter. Now it's something different, and it could continue to change at a pretty quick rate. And so you have to keep that in mind. So anytime you don't want to get caught in a mindset that as soon as you see, proof that, for example, the 524 rule with Chase, we're seeing now that that's kind of becoming, that's shifting a little bit. Chase is testing out, letting people get approved for cars when they're at 624 and 8 and 924. All right. So these companies can make these sweeping changes, and you just kind of have to keep up to date with these different moves. All right, next story. 83% of consumers still prefer going to a traditional bank over digital transactions. I wonder who they're polling here. Let's get into it. So, a new user testing study revealed that when it comes to finances and banking, people across all generations prefer a human touch. 83% said they prefer using a traditional bank for their finance needs. A third of people, 36%, said they strictly use traditional banks, ditching digital completely, including 40% of Gen Z and 34% of baby boomers. In comparison, only 10% overall said they rather just use a digital bank with no physical presence. People who prefer traditional banks said they like having the confidence that their transactions are being handled correctly, 60%, and being able to talk to, I guess, a person that's in the 50s. So that's a little surprising. I would like to know some more specifics, because I've seen studies, in previous months that said a little bit of the opposite, that people were fine moving over to digital, or maybe they were okay moving over to digital payments when you do like tap and pay with your iPhone. I do that all the time with my Samsung, and it's convenient. Now, my primary bank is SoFi. As you know, I've been with SoFi for like 3 to 4 years, or actually 4 years now, banking with them. And I've had their credit card for 3 years. And they're strictly an online bank, but they've been good. I haven't had issues with them. I've moved over to mostly cashless, so I rarely ever have to handle cash. And I know there's a lot of people, especially younger people, who don't have a problem with that. I think it's really the older generations that, you know, feel the need to carry the cash. And I see it mostly as like not a fellowship, but it's kind of like when you're trying to um, go in with somebody to buy a meal or to buy like a Christmas present. The older generations like to deal in cash. They find it a little bit harder to find the app, open the app, get their login information, then get the other person's contact information into the app so that they can link to the right person. And so that, I think it's mostly that, and they mask it, the fact that they don't want to learn how to use that new system. They mask it and say, no, you just need cash. Cash is king. You just need cash the way it's always been. They're more focused on how things have been done in the past, less so in the present and where it's going in the future. Next, we have MasterCard taps open banking for digital account opening. So, MasterCard has unveiled a digital account opening tool that uses open banking to integrate customer verification with identity insights into a single API. So, that's an application programming interface, and that basically means that it's a tool to link two different softwares together, and so that that functionality can flow through to the next software, so that they can like communicate. Open banking for account opening verifies a consumer's account ownership and their identity in real time. It also pre-fills account and routing data to minimize errors. The result, says MasterCard, is a simpler, faster, and safer way to open a new account for the 93% of consumers likely to use digital payments this year. So I love this because I can't really, if I'm thinking about the way that it can work for the average person, for us, it can be something that allows you to circumvent, all those that days long process of verifying the bank account. Whenever you're trying to link your bank account to get paid out from an app or from maybe a side gig or something, you always have to verify the two balances, two-factor authentication, or you usually have to kind of wait a while. I like the fact that it's real time. That's really good. And then the fact that you don't have to go scouring through your transactions to see, okay, what 15-cent microtransaction came first, so that I can go over to another website to verify it. I don't like that. Next, we have MasterCard, PayPal, and Robinhood dive deeper into crypto as industry shows promise. Now, I who's thinking that the industry's showing promise? I thought it's pretty much down and out right now. But a few people think it's going to come back. In recent weeks, a number of brand name mainstream financial institutions have been rolling out new crypto products and services in an attempt to make the space more accessible. At the end of April, MasterCard, PayPal, and Robinhood all independently talked about the measures they're taking to do so at Consensus 2023 and how they are furthering their moves into the crypto ecosystem. So listen, I guess the ball keeps on rolling. I feel like everybody that was involved in the crypto space kind of faded back into kind of non-existence. We don't really hear it talked about in positively, at least. And so many different companies have gone under. So many dominoes have fallen. A lot of people, even I know some of you, and if you lost some money, go and talk about in the comment section. If you lost some money trading crypto in one of these crypto debacles, I feel bad for you. But let me know, do you think it's coming back? And if so, how soon is crypto going to come back and kind of be on the forefront? Or is that a fad that's long gone? Or is this going to be in our past? Next, we have Warren. Other senators call out banks over card late fee practices. So, a group of 7 senators sent letters Tuesday to the CEOs of 10 of the largest U.S. credit card issuers, demanding details about their company's late fee practices and citing a CFPB effort to curtail those fees. They demanded responses by May 23rd. And so that's in 10 days from now. The Democratic senators, along with independent Bernie Sanders, sent letters to the CEOs of JP Morgan Chase, Bank of America, Citi, Wells Fargo, US Bank, PNC, Capital One, Amex, Discover, and USAA, asking about the company's effort to squash that rule. Banks and banking trade groups have pushed back on the CFPB's February proposal to limit credit card late fees to $8 per payment and ban those fees from being more than 25% of the minimum payment. So I think this is really just fighting over, not pennies, but it's most of the credit card issuers' revenue is not coming from these late fees. It's probably a good amount of money, but they're making all their money from interchange fees that they charge merchants, annual fees, interest payments. That's a big one, interest, because just under half of the population is paying interest on these credit cards, and so they're making money from every side. And on top of that, they have extra charges like late fees. They're going to win regardless. But I guess they're not trying to give up any ground to the American public and to these senators. But I think it's overall it's a decent, it's a decent thing to do if they truly care about how much people are paying But listen, you're not going to get a late fee if you're making your payments on time and setting up auto pay. And that's just the best practice to have. Next, we have just hit the like button. If you want to see more streams like this, I do them every Sunday. And as you can see this week, I chose to film a day earlier just so I could still get it out and converse with you guys. But go ahead, hit the like button to see more streams like this every Sunday, 7 p.m. All right, next, Senate holds first hearing on bill to help marijuana businesses access financing. So the Senate Banking Committee is holding its first ever hearing Thursday on a bipartisan bill that would allow the cannabis industry to access traditional banking services, which marijuana businesses see as critical to their survival. Under federal law, banks and credit unions face federal prosecution and penalties if they provide services to legal cannabis businesses, since it is still a Schedule 1 substance, along with heroin and LSD. Without access to traditional banks, legal marijuana businesses can't access loans and capital or even use basic bank accounts. Wow, that's I didn't know it was that bad. As such, businesses are focused to operate in a cash-only model, which can result in robbery, money laundering, and organized crime. Key components of the bill protect banks that work with state legal cannabis businesses. The legislation would shield them from being penalized by federal regulators and creating a safe harbor from criminal prosecution, liability, and asset forfeiture for banks, their officers, or employees. So, that's a kind of a big deal when it comes to business funding. If we're going to step into the business funding lane real quick, industry type is a big deal because certain lenders specialize in certain industries. Now, so if you're dealing with like a broker, like I'm partnered with RRK, Rock Financial, and National Business Capital, you can find those links in the description if you need funding for your business. But they are brokers and they basically shop your deal. So whenever you need funding for your business, they put together a deal package for you depending on the specifics of the numbers of your business and personal credit, and then what your ultimate goal is to do with the money. And they basically package that up into the best looking and strongest deal that they can make to the different lenders. They shop it around and see who can give you the best rate, and and you might get multiple offers, and then they can also do some negotiation to get you better terms. But when you're dealing with a broker, they can service so many different industries, a wide range, because they're working with different lenders. But when you're dealing with a bank, the problem is that different banks will specialize in industry. So you'll see a lot of the time, maybe they're big on restaurants and retail, and then others might not like retail and they're more big into construction, and medical. So the problem here is that this industry type seems to be kind of forbidden by most of the lenders. Now, when I spoke to, and you're going to get a video soon about Rock Financial, they actually deal in this market. So they will fund marijuana based businesses. All right. So you kind of, especially in this situation, you would have to go the alternative lending route, the alternative unsecured lending route. And that would really help you. But it is unfortunate. I see here in New York City, they're constantly on the news. I'm seeing they call them vape shops or smoke shops. They're always getting robbed. There's always some sort of crime element involved in them, people getting shot. And it is a shame because, and I didn't know until kind of diving into this story that it was because they're all cash. They're probably all dealing with thousands, tens of thousands of dollars. And they know if they go in that and rob that store, then they're going to get a bunch of, physical cash that can't really be tracked. So, yeah, I think it's a good deal that, if you're going to legalize this drug, you might as well make it so that if you construct a business around selling that drug legally, then there shouldn't be a bunch of roadblocks in front of you to getting funding, especially when the people want it. Because what is a business? A business is made for serving people. It sees what the market wants, what the people want, what they'll pay for, what they like, and they serve it to them and for a profit. And so if they're doing that, then they should be able to operate. Next, Walmart gift card, $4 million settlement. Who qualifies and how do you apply? So Walmart will pay $4 million in connection to gift card scams. Walmart gift scams started in 2015 when fraudsters instructed victims to purchase and send cards ranging from $500 to $1,000 between 2016 and 2017. Walmart reportedly froze the balance of gift cards suspected to be part of these schemes. Money that was later sought by the Department of Justice. To qualify, a person must have purchased a gift card from April 1st of 2016 to July 31st of 2017. As a result of fraud, the amount consumers can receive is based on the amount loaded onto the Walmart gift card they purchased. And the deadline to apply is going to be July 14th. So that's coming up fast. Documentation of gift card purchases is required. So a few things. It's kind of surprised me when I first read it. I was like, based on what I saw, like, why is Walmart going to be held liable? Why are they paying the fine? Because scam artists were the perpetrators, right? So why would Walmart be at fault? But there's three things. Walmart was aware of the scam, but did little to stop it. So maybe Walmart found out about it early on, right? And they just didn't put the processes in place, the safeguards in place to reasonably stop it for a general public that kind of was unaware. You kind of have to protect your customers. You know, it's kind of, and so they found them liable because of that. Also, Walmart employees were not trained to spot gift card scams. And so they didn't put out a bulletin. They didn't have a workshop or, a video training to sit them down and say, hey, these cards, don't, watch out for them. If somebody's doing this, keep an eye out for that. And also, Walmart did not have adequate security measures in place to prevent scammers from redeeming stolen gift cards. And so if you put all that together, they found that Walmart just didn't do nearly enough to protect everybody. And they got to pay the price for that. Also, TD Bank launches 2 trash cards. Now, I sent this out in my newsletter. Definitely take a look. I'll have a couple links in the pinned comment of this stream, okay? And so you can access my newsletter. You're going to get this information days ahead, and everything's just going to be better structured, and there's going to be a few more thoughts in that newsletter. And plus, I give you free downloadable freebies from time to time, and you'll just be first to know about any new credit cards that I find that will show your starting limit before approval, which everybody wants to see. All right. So, but let's get to these TD Bank cards. So first one is TD Clear. It's a no interest credit card that charges a simple monthly fee, offering a choice between a $10 monthly fee for a $1,000 credit limit or a $20 monthly fee for a $2,000 credit limit. It has no hidden fees and doesn't charge foreign transaction fees, annual fees, or cash advance fees. Over the limit fees, return payment fees. Oh, so all the fees, basically. It doesn't have any of that. The main thing is there's no interest charges. So, but the first big fee is the one right on the front, is that it has an annual fee. Okay. The next one is the TD FlexPay. This credit card provides increased payment, flexibility, and generous balance transfer offers. Cardholders have the option to schedule a skip of payment once a year, along with TD's best balance transfer offer. It also offers a 0% introductory APR for the first 18 billing cycles. So I like that last part. That's about the only thing that I like about these cards. Maybe the design. I'm just trying to be nice here. The design looks pretty good. Okay. And then the 0% APR period is good. Everything else is trash, guys. Listen, first off, there's annual fees. Okay. Now, if you look at their advertisement, they say they're marketing this to people, saying that it's clear fees. You know what you're going to pay up front, easy monthly payments that you can count on, that you don't have to think about. But is that a real problem? Is that a real problem for people? I don't think so. I don't think people want an annual fee card with no rewards when you can easily, there's so many cards these days. We're spoiled for choice at this point. You got cards that come with $200, intro bonuses with 0% intro periods with multiple bonus categories. This has none of that. And really, the summation is that both of these cards are marketed towards people that plan on carrying a balance. That's none of you guys. I know you're not planning on carrying a balance. So I guess in the event, in the off chance that somebody, if you would compare somebody who carries a balance constantly, which I guess is a lot of people at these days, and you compare that to somebody who got this card that just maxed out the card and carried a balance the whole time, but they just paid $20 a month, they're going to end up a little bit ahead for sure. They are going to be ahead, but they don't have the option to not pay the fee. You always have to be saddled with that $20 annual fee or the monthly fee. So that's the problem I see here. And then I believe both cards do have the annual fee. And if you want to skip a payment, well, listen, that's just bad, management. Like if the type of person that would just say, "Oh, I get to skip my payment now." They're not handling their credit card properly. They shouldn't even be using a credit card. But if you're interested in one of these two cards here from TD Bank, let me know in the comment section. Just type in TD's the best or something like that. Let me know, because I just think this is unequivocally a bad product. And I don't know who this is. Even people who know they carry a balance, know that they're bad with money, they would still look at this card and say they wouldn't even do the math. I don't think they would understand that it would end up better, but it's not coming with an intro bonus. It's not coming with the it's not coming with the intro bonus or anything like that, and the bonus categories. So TD Bank, what are you doing here? Now they did do updates to their other cards that I think were good, which I covered in the newsletter, which I think those are good updates to the other two cards. They should have just left it at that, at updating and revamping their other two cards. These products are unnecessary. And see, another thing with a credit card, a standard credit card, you have the ability to pay. What is the standard minimum payment? You can pay like 2 or 3% of your statement balance is your minimum payment, or like $25, whichever is cheaper usually. If you're a person that was carrying a balance, wouldn't you want the ability to pay less of the monthly payment? I feel like people are more concerned with a lower monthly payment that they can understand and afford, rather than having equal payments and an annual fee. Because with a credit card, you have the ability. I'm always about freedom of choice. If by chance you were in an emergency and you absolutely needed to carry a balance, it would be nice to have a considerably lower monthly payment. And once you got yourself straight, you course corrected and you figured it out, now you have no annual fee and you're paying statement balance automatically on time, and you're good to go. So TD Bank, that's this update. These cards suck. All right. So next, here's a cool credit card tracker. So here's what I did. Again, if you want access to this credit card tracker, there's going to be a link to the edition of the newsletter that I had it in, which is the most recent edition. So this tool assists you in managing your credit card journey. It includes different tabs to organize key information such as your credit card inventory, potential cards you may consider in the future, checking and savings account bonuses, your rewards balances, credit scores, and points valuations. By having all this information in one place, you can easily manage and optimize your credit card usage to get the most out of your rewards. Now, one thing I've had a problem with is because I have so many cards, and I'm actively using different cards for their best bonus category, and it's hard to keep up with that sometimes. Like, I tried to use the method of like going into my virtual wallet and labeling each card and what it's for, but sometimes I switch it up, and sometimes they'll 1 month that card will have an elevated bonus, and I don't, it's a little bit of hassle to go back in and update that. So it's nice to have kind of a central hub. You're going to see multiple tabs for every specific task. It's going to have those 5 different tabs for you to click in between. And all you got to do is is go to that the last newsletter, and then it walks you through how to copy that into your own Excel, your Google Sheets, and that's free. Next, Chase is opening a brand new luxury lounge. So this Chase is opening its first Chase Sapphire lounge in the United States at Logan International Airport. So the lounge will be spacious and highlight the history of Boston. It will feature a locally inspired dining experience, a tap room with local craft beer, and a coffee bar. So listen, if you want to wake up or you want to chill out, you're going to be good either way. The lounge will also have wellness rooms, shower rooms, and all gender restrooms. Okay, so that's they're trying to keep up to date with all the politics here. All right, these companies feel like they need to do that. Access to the lounge will be primarily for Chase Sapphire Reserve card holders with a Priority Pass membership, making it an exclusive perk. All right, so the lounge looks impressive with beautiful decor and a great selection of food and drinks. So listen, I gotta admit, it does look nice, and these are actual pictures. This is an actual picture of the lounge, guys. So I've never really used. I have the Venture X, but I haven't used the Priority Pass lounge access or going to one of the Capital One lounges. But if you do in fact get whatever you want, if you get the coffee that you want, and I'm not sure even how they're doing it. What is the limit on that? Because liquor and beer is going to be. Oh, I got it. What they're probably doing is they're going to charge you for liquor, and then they're going to give you free beer, and it's probably a very limited quantity or a limited selection. Tell me, guys, if you have experience with this, how far does this go? Like, how good is the food, and how good is the selection of beer? Because that's got to be expensive. Now, the fact that it's only for the Sapphire Reserve, I'm happy they did that, because so many people, the general strategy is to go for the Sapphire Preferred. And so they need to start giving more features and perks to that Reserve card to pull people, if they're going to do this right, to pull people from the Preferred and make them see why they should upgrade or keep the Reserve card. And it doesn't have enough. It's the bang for the buck is not there. The value is not there to make people upgrade from the Preferred card. And so that's a step in a good direction for them, right? But I saw that also with this lounge is you can only enter the lounge 3 hours before your departing flight. So if you're flying into Boston, you can't go there. Okay, so this is standard though, but this kind of goes along with the reason why I've never really been excited about lounges, because they limit you so much. And there's other limitations as well. Like there's only one that's going to be offered. They're not going to be even if your credit card has a lounge in that airport, it may not be in the terminal that you're in. It may be out of your way. You got that 3-hour window, you got to come. And then because they've offered it to so many people, it might be overcrowded. Maybe there's a 45-minute wait to get in, right? And maybe you don't have time to do that. And also, once you get in, they could run out of their free stuff. I mean, you have to understand that you're not paying that much money for things that are free for everybody that gets in. So they're not always going to have enough supply to service everybody to give to. So these are kind of things that I think about when I look at this, but I got to admit, the lounge looks nice, and it definitely beats being in the general population of the airport where you got canines and just, if you're in New York, some of these concourses are dilapidated. I mean, you got pigeons flying around, right? And you got babies screaming in your ear, and you're looking for that seat with the charging port, and you don't find it. People are constantly dragging their luggage in front of you, knocking your legs. So it can definitely get rowdy out there. So I like the fact that you have showers too. So maybe you have a long layover. It might be good for, traveling abroad. Could be great for that. If you want to, get nothing beats a shower, get cleaned up, get refreshed. But have you used the lounge? Let me know if you use the lounge. Let's talk about it in the comments. I still haven't, got that experience yet, but I want to know if it's worth it. All right, next, Chase 524 rule beaten once again. So one Chase card holder decided to play the credit card game in order to collect sign-up bonuses. So over the course of 11 months, and they managed to require a total of 11 credit cards. Interestingly, they had initially believed that being at 524, which is having opened 5 or more cards in the past 24 months, would result in a denial for a Chase Inc. card, but they were instantly approved below. And so right here is a breakdown of the dates and the cards they were approved for. And you can see that, most of these cards came in recently. Now, a few cards you could argue could be excluded because they were so recent. Maybe it didn't report on their Experian credit report, like the Wells Fargo Built card was recent at the time. And so because they posted this a few days ago. But even if you even if you exclude the cars that were approved recently, they're still over 524. So this is just the latest example of how Chase is changing a bit. Are there at least testing? Numerous reports out there, dozens of people have said that they were able to get approved. So really nice to see that they're opening the doors to more people potentially. But one thing that I've seen a lot of people get confused about is their business cards. With Chase, when you get approved for a Chase business card, it does not count towards 524, but their Chase business cards are under the 524 restrictions. So if you're going up to apply for a Chase business card, you do need to be below 524. Okay. The only thing is that going forward, if you're applying and let's say that, you sign up for 2 business cards. Well, those 2 business cards aren't going to count against 524. But if you're already at, if you're already above 524, then you're not going to be getting approved for a Chase business card. Hopefully that makes sense. It's it works one way and not the other with the business cards. And that's been a big thing that I've seen multiple people get confused about. All right, next, the 80,000 point offer for the Chase Sapphire Preferred card is ending soon. So I got word from Chase themselves. They put out a press release saying that this 80,000 point offer, which it seemed like it just started, but they're saying that it's going to be ending soon. So what that typically means is that it's going to be like, they usually work in seasons. So in like a 3-month period, they'll offer it. The 2 to 3 month period, they'll offer it. So I'm guessing that you're going to have until, and this is just an educated guess, it's May 14th, the time that you're watching this. They're going to, I would say by the end of June. So if they're probably going to end this offer by July 1st, or I'm sorry, yeah. Yeah, I would say July 1st is when they're going to probably switch up the offers and then switch it to another one of their lineups. They'll probably move it over to the Freedom lineup. So the Freedom Flex and the Freedom Unlimited. They'll probably get some elevated offers there. So if you want to check this card out, I have a link pinned in the description in the comment section if you want to check it out. A lot of people, very popular card. All right, and also I want to let you know, guys, I partnered with Kovo, which is a credit builder, and a lot of people were kind of excited about this offer because, as you can see, one person said, because of Kovo, my credit score went up from poor to outstanding, and I'm very grateful for that. So basically with Kovo, they give you a installment loan over the course of 2 years. And so I actually talked to their team, one of the co-founders. I talked to one of their employees that actually came from the credit bureau. So one of their employees came from multiple credit bureaus. He worked at these bureaus, and so he's bringing that knowledge over to this company, and that's why they spread it out over the course of 24 months, because it just takes longer to to build your credit effectively. And the good thing is that I haven't seen this anywhere else, is that Kovo will report to all three credit bureaus and Innovis, which is kind of a little known fourth major credit bureau. It's not as big as the big three, but it's just below them, and they still report data from you, but they report extra data like utility bills and cell phone bills and these kind of tertiary extra business information. That's what they specialize in, and they report those to businesses. So there's no way for you to contact them on a personal basis. There's no credit score that they generate, but they still work hand in hand with these different lenders, and they do provide information to lenders. And Kovo does report to them. And so what Kovo does is they'll get you this installment loan, and I believe it's $10 a month, and over the course of 24 months, and they'll give you access to a lot of financial educational classes for free. And so or for that amount, they'll give you access to their lineup, their suite of classes related to finances. So if you're not really informed at the moment, it could be very beneficial to you. A lot of people have been liking Kovo. And next, also, don't forget, I have a whole sheet, a running list of cards that will show your starting limit before approval. I have all that linked up below, and I have links to every one of the cards. I think what I was really excited about was I posted a recent poll to everybody, and I asked, how much did since you subscribed to my channel, how much had you increased your credit limit? And thankfully, I mean, a considerable portion, I think it was around 65 to 70%, say that they've increased their credit limit by at least $500. I think 30% said over $20,000. That's amazing. I'm happy to see that. So I have more cards coming that I've become aware of, that I've researched, that do offer your starting limit before approval. There's some new cards that you probably never heard of that are offering this feature. And so I'll be going into detail about those cards in coming videos. So definitely stay tuned for that. But guys, I want to say, if you've gotten a credit limit increase in the past week, you got approved for a card, definitely let me know in the comment section. I will shout you out somehow, maybe in the community page at some point throughout the week. I just want to hear the good news. I love to see you guys grow. And listen, thank you for hanging out with me. And you're going to see me in the comment section with you, just watching along, cringing. But listen, I'm going to see you back next Sunday at 7 p.m. like usual, and have a great evening.